The headline here is U.S. hard housing starts plunged most since COVID in March. And so there's this little chart here. It says, with home builder confidence languishing near COVID lockdown lows and mortgage rates rebounding higher, it should be no surprise that housing starts were expected to decline in March. However, the scale of the drop is dramatic, tumbling 11.4% month over month versus 5.4% expected. And so here we've got the cute little chart here. So we've got home builder confidence, which is the green line, which is sort of has stayed more or less steady, floating between 20 and 60 on this chart. And we've got home builder confidence, which is the red line, which has absolutely plummeted since 2020. So it says here, the monthly swings in housing starts recently have been wild to say the least. Building permits rose 1.6% month over month, better than expected. On a SAAR basis, housing starts are back near COVID lockdown lows. The plunge in housing starts was dominated by 14% month-over-month collapse in single-family home starts, the biggest drop since April 2020. The more forward-looking building permits continue to roughly track Fed rate cut expectations. That I find interesting because look, if people are building permits around where folks are expecting, like if building permits are meeting expectations, that will signal to me that there are no major significant changes coming to the housing industry. It says your prices have come off their peaks as builders deploy incentives to try to clear excess inventory, which still stands at the highest since 2007. It's also prompting builders to slow down on projects, with the number of single-family homes under construction falling to the lowest level in 4 years, continuing a steady decline back to mid-2022. So I think that this here is good news for people who are looking to buy and bad news for people who own homes. And here's the reason why. And I know that this is like kind of like technical financial jargon that even I don't understand fully, but here is what I find most interesting. Prices have come off their peak somewhat as builders deploy incentives to try to clear excess inventory, which still stands at the highest since 2007. Oh, interesting. So we've got high inventory, but low demand. Builders are trying to deploy incentives on how to get rid of this inventory, how to sell the stuff that they have. What might they do in order to clear some of that inventory? Oh, I know. What if they did a sale? What if they lowered the prices? Maybe that would incentivize more buyers to buy what they got, and that would help them clear out their inventory. And so for people who are looking to get into the housing market, right, trying to, look at things from afar like a shark, this is good news. But for people who actually own homes, this is not great news, especially if you are not in a forever home. Many people nowadays, they move. Not super often, but they do move. They buy a house in one place, they stay in it for a few years. Then they sell that house and go to another place, and they stay there for a few years. And then they sell that house, and then on and on and on until they die, maybe in the middle of while selling a house. That's just a cycle of how things go in America. That's just the state of things. And so for people who own houses, who like doing this, who like buying houses and then selling them after a few to several years and then doing the same thing over and over again, this is actually going to hurt. Because when you sell your home, you will be underwater. You will have lost money. Let's say you buy a home for $800K, and then because of lowering prices, people competing on price now to sort of sell some of this inventory, right? This housing inventory. Let's say that the house that you bought at $800K is now $600K. So you're down $200K on your investment on your home. That's not great. That's not great. Looking at a whole lot of red like Playboy Cardi from a few years ago. This is not good. This is not great for people who own homes. But I think one of the best things about this is most people don't own homes at this point, so it's not going to hurt the majority of Americans. Now, it will hurt a lot of the folks who have invested heavily in the housing market, but at the same time, land almost always appreciates. So I don't think these people will be like hurting or seeking to leave the industry. But I just do think it's interesting, especially because oftentimes when the housing market crashes, the economy crashes as well. Now, I've said that the market has been due for a correction because of Trump's COVID stimulus checks artificially buoying and propping up the American economy for some time now. But things like this can very quickly trigger an economic recession, and things could go very downhill. And I think the worst part about this is there's actually nothing that Trump can do about this. I think maybe Fed rates can help or hurt this slightly, but at the end of the day, there's nothing that Trump can do. There's nothing Trump can do. There's nothing Trump can do to get rid of the starvation for demand for houses that are at high prices. So the bubble's just going to burst. People are going to buy houses again, and then the whole cycle that sort of has been sparked since 2008 is just going to keep on recycling. So, yeah, I find that interesting. But, yeah, if you own a house, let me know in the comments down below. I don't know how many of you guys own houses. I don't know.